Hi, my name is Ajay Tyagi, and I am the portfolio manager of UTI Equity Fund. Let me start by wishing you and your loved ones a happy, prosperous, and healthy 2021. 2020 has been one of the most volatile years in recent memory. As you would recall, the year started very well on a strong footing, but by March and April, we did see a very huge correction in stock prices around the world and, of course, in India as well. And somewhere towards the middle of the last year, we saw some bit of confidence returning back to the markets. And from there on, it has been a wonderful ride. So, what do we make out of this hugely volatile 2020? Has it been an unusual year, which is never to be repeated? Or do you think that such kind of years can keep coming every once in a while? We clearly believe that while you may never have any idea about what the next 12 months would have in store, but you can have a very sound philosophy which can help you navigate through these volatile times. And that is what our endeavor has been in terms of our philosophy in UTI Equity Fund. The first tenet of our philosophy is never compromise on quality. Buy great businesses which have leadership positions, which have a strong brand recall, which create and generate strong return on capital, have strong cash flows, and therefore don't have any debt on the balance sheets or have very low debt on the balance sheet. Such kind of businesses, regardless of how markets or how the real economy behaves, usually are able to navigate and come out stronger on the other side. The second tenet of our philosophy is to look for businesses which have growth tailwinds, which are able to take advantage of growth in the coming years and hopefully coming decades. And hopefully, because of quality as well as growth, we would be able to select businesses that can compound what we call as economic value and therefore allow us for a more sustainable and predictable wealth creation. This is all that we try and attempt to do when we carve out the portfolio of UTI Equity Fund, rather than trying to figure out which sector will do well, which themes will do well, and therefore which kind of stocks will do well in the next 12 months. We remain purely bottom up. We don't try and take a call on whether mid caps or large caps or small caps will do well. The best businesses that we feel enter into the portfolio and stay there, and we patiently ride on them for a 3 to 5 year period. And likewise, we also don't take a call on which sectors we have to overweight or underweight. Finally, I would also want to speak to you about UTI Equity Fund now being called as UTI Flexi Cap Fund. Many of you may already have received a communication from our side on this. I want to reassure all of you that while the name is changing from UTI Equity to UTI Flexi Cap, there is nothing else that will change in the portfolio, either in the key philosophy, the tenets that I spoke to you about, or our strategy. We would continue to manage this fund exactly like we've been managing over the last 5 years. And it will also be allowed to invest across sectors, across market capitalization buckets without any restrictions. With that, I would like to end today's session. Thank you very much for your patient listening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.